What makes Forex different from stocks and crypto? Alright, picture this. You're at a dinner table. One friend's talking about buying Tesla stock, another just made a killing on crypto, and then someone drops, "I've been trading Forex lately." Forks pulls mid-air. Someone asks, "Wait, isn't that like gambling?" And someone else goes, "Isn't that just for bankers?" Sound familiar? Well, if you've ever found yourself wondering what actually makes Forex different from other markets, especially stocks and crypto, this video is for you. Welcome back to Pit Buddy, where we cut through the noise and help you build real trading skills from the ground up. You don't need a finance background or a crypto wallet to start, you just need curiosity and a willingness to learn. So today we're going to be answering a deceptively simple question. What sets Forex apart? Let's break it down side by side. Let's start with the basics. Think of each market like a different kind of racetrack. Stocks are like running track lanes. You pick your favorite runner, say Apple or Google, and bet they'll do well over the time. You're buying a share of a company. You're technically a partial owner, and as the company grows, your share value grows with it. Crypto is like an off-road rally. It's fast, volatile, unpredictable. You're not buying ownership in a company, you're buying into a digital asset that's decentralized, meaning no government or central bank controls it. Bitcoin, Ethereum, Dogecoin, the list goes on. It's new, it's experimental, and it's emotional. Forex? Well, Forex is the Formula One of financial markets. It's fast, it's global, and the drivers, they're currencies. You're not buying a company or a coin, you're trading one country's currency against another. In short, stocks equals companies. Crypto equals decentralized digital assets. Forex equals economies versus economies. Now, let's talk about market hours, a major difference most beginners just overlook. The stock market opens at specific hours, depending on your country. If you're in the US, that's 9:30 a.m. to 4 p.m. Eastern, Monday to Friday. Outside those hours, no trading. Crypto, on the other hand, is open 24/7, literally all day, all night, weekends, holidays. Your blockchain doesn't care if it's Christmas. Forex, though, has a unique rhythm. It runs 24 hours a day, but only 5 days a week. It opens Sunday evening and closes Friday night. Why? Because it follows the global business day. As markets close in one part of the world, they open in another. That's why we talk about trading sessions. Sydney, Tokyo, London, New York, each one bringing its own new volume, new behavior, and new opportunity. So if you've got a 9-to-5 job, no problem. Forex is flexible. Night owl? Then trade the Asian session. Early riser? Trade London. Want action? Trade when London and New York overlap. You don't get that kind of flexibility with stocks. Alright, now let's talk about volatility and risk. Crypto is the wild child. Price swings of 5%, 10%, even 30% in a single day, that's totally normal. So you've got to have a lead belly of steel for it. If you're right, you're a genius. If you're wrong, you're wrecked. That kind of volatility is a double-edged sword. High potential, but high danger. Stocks are generally more stable, especially the big ones. Sure, news or earnings can move prices, but it's more controlled. You also get dividends in some cases, which is like a bonus for holding long term. Forex, though, moves differently. It's incredibly liquid, meaning there are tons of buyers and sellers at any given moment. This makes price movement smooth and relatively controlled until something big happens, like an interest rate change or economic report. On average, currencies don't move as wildly as crypto, but with leverage, even small moves can mean big results or big losses. Speaking of leverage, leverage is like a magnifying glass for your trades, and here's where Forex stands out again. In the stock market, leverage is limited. Most brokers offer 2-to-1 or 3-to-1 ratios, unless you're a professional or using complex instruments. In crypto, some exchanges offer crazy leverage, that's 100-to-1, or more, but that's often unregulated, extremely risky, and one wrong move can wipe your entire account. In Forex, leverage is common and often regulated. Depending on where you live and who your broker is, you might get 30 to 1, 50 to 1, even 100 to 1. That means you can control a larger position with a smaller account size. It's one reason so many people start in Forex. But just remember, leverage is a tool, not a shortcut. It can work for you or against you, and we'll teach you how to use it properly. So let's talk barriers to entry. Stocks often require a bigger account to get meaningful results, and if you're outside of the US, accessing the biggest stocks can be a little complicated depending on your broker. Crypto is wide open. No central authority, no ID in some cases, just a wallet and some funds. But with that freedom comes risk. Scams, hacks, missing coins. It's a bit like the Wild West, exciting but unstable. Forex is somewhere in the middle. It's regulated but accessible. Brokers are everywhere. You can open an account with as little as $50. You can use demo accounts to practice, and you're trading a market that's been around for decades, not something invented 5 years ago by a guy named Chad on Discord. Another cool thing, Forex doesn't require fancy hardware or mining rigs or massive capital. All you need is a decent internet connection, a broker account, and a platform like MetaTrader or CTrader. That's it. Now let's simplify this. If you buy a stock, you own a slice of a company. You're basically saying, I believe this company will grow. If you buy a crypto coin, you're owning a digital asset. You're saying, I believe in the technology and the future of this coin. But in Forex, you're not buying something that exists on its own. You're always comparing two things. It's relative. You're saying, I believe this economy will outperform that one. You're not betting on just one thing to rise, you're betting on a relationship between two forces. That mental shift, that's what makes Forex so intellectually rich. You're trading comparative strength. It's like a tug of war where you're watching both teams and picking the winner. So why does any of this actually matter? Because choosing the right market matters. Not every market fits every personality. Stocks are great for long-term investors. Crypto is great for you if you like high risk and high reward. And Forex is for people who want flexibility, who enjoy fast-moving markets, who like the idea of reading global news and connecting the dots, who want to trade, not just hold and hope. And here's the big one, you don't have to choose just one. You can trade Forex and still invest in stocks. You can buy crypto and learn currency analysis. This isn't about joining a cult, it's about understanding your options and making informed decisions. Forex just happens to be one of the most overlooked, understood, and incredibly powerful options out there. So now you know the difference. Forex is fast, flexible, and global. It's not just about money, it's about understanding how the world works. And the fact that you're here watching this means you're already ahead of 99% of people who've never even heard of it. In the next video, we're going to be going deeper into one of the coolest features of Forex, how it runs 24 hours a day, 5 days a week. We'll walk through the major trading sessions and how to find the right time to trade based on your lifestyle. So hit that subscribe button. You're not just learning theory here, you're building a skill, one that can grow with you, stretch around your schedule, and challenge you to think globally.